From Creamer Media in Johannesburg, this is the Real Economy Report. The President of South Africa, Jacob Zuma, has officially launched the state mining company, African Exploration Mining and Finance Corporation, where he said that the government would no longer only be a regulator of the mining industry, but also a participator.
The role of the state cannot merely be confined to that of a regulator. The state must actively participate in the mining industry to ensure that our national interest is protected and advanced.
To say, whilst we want to make sure that we play on an equal field with all private sector players, it will also be wrong of us not to have a particular bias towards a state-owned mining company whose primary motive is to make sure that we've got energy resources. Because the very same private sector, for them to be able to invest in mining, they would need energy. So it is important that we do have a platform to assure the private sector for access to security of supply, whilst at the same time creating a platform where in other areas we can compete on equal playing fields.
The private sector just needs assurance that there's not going to be preferential treatment given to the state mining company.
Well, we're not going to give any preferential treatment to the state mining owning companies. It will compete in the open markets like all other companies. They apply, follow the due process. If they succeed, okay. If they don't, they've accepted that.
Has this business plan been interrogated well?
We've experienced in the past where there was no participation by the state, and we have suffered a lot. Our economy, when you look at the last economic crisis, one of the challenges, one of the issues where we lost was the issue of local supply in terms of coal, because all your private sectors had long-term contracts externally, and we had no leverage for it.
We are positioning ourselves to play a critical leading role in the beneficiations of our minerals. We will also be increasingly evaluating our entry options into the PGMs and base metal to diversify our portfolio. Mining will be conducted using a contracted truck and shovel fleet. During the initial years, the mine will initially produce 800,000 tons per year, and then steadily ramp up to about 1.68 million tons. But there's nothing that stops us to go as high as 3 million tons per annum, depending on the appetite from Eskom. The coal from the Flag 14 project meets some of the current and future Eskom power station specifications, which does not require further processing except for sizing. AE will build a crushing and screening plant to size the coal to the required Eskom's specification. The estimated end-of-job capex for this project is 130 million rands. Our first coal will come out in June this year. One of the projects which is at an advanced stage is called the T project in the Bethel. The products that will come from this operation is coal and the synthetic crude oil. We are looking at producing between 10,000 and 15,000 barrels a day of crude oil in that particular operation. So there's a potential for foreign exchange savings of between 2.5 and 3.8 billion rands per year.
The big fear of everybody is that you're going to go knocking on the door of Treasury.
I don't intend to always ask Treasury to fund us. At some point in time, we have to be standalone company utilizing our own cash flows to venture into new projects. So I'll run these projects on a commercial viable basis.
Other news making headlines this week include Shell's announcement that the Karoo shale gas exploration could take 9 years, how laser mapping eases infrastructure development, and that low-quality fuel affects automotive manufacturing. International energy group Shell expects its proposed exploration of shale resources in the Karoo, located in the southwest of South Africa, may involve 9 years of prospecting and more than $200 million worth of capital before it will be in a position to determine whether or not commercial gas production would be viable.
To give a rough idea of the longer timeline, we find it hard to imagine that even if things go very smoothly, we can't imagine that we will be drilling before the latter part of 2012, which would mean, just as a reference point, that very unlikely to be getting into this fracking of any wells, probably not before even early 2013.
Aerial mapping company Southern Mapping Company and its South African subsidiary Southern Mapping Geospatial use near-infrared lasers in aircraft to map large areas in high detail, specifically for the agriculture, mining and infrastructure development sectors, as well as for disaster management purposes.
The technology is basically we're mapping the world and bringing it into the engineer's computer in 3D. Our accuracies on flat pieces of ground are right down to 15 millimeters, which is fantastic if you think the aircraft or helicopter is flying at a certain height, at a certain speed, and we are getting these accuracies. The laser is firing 200,000 laser pulses every second in time. And so you get this beautiful three-dimensional model with the images draped over, and when the engineer's working on it, he's working on it on his computer in 3 dimensions. But in essence, the laser points behind those, all the mathematics, so you can get all the slopes, all the drainages.
South Africa's automotive industry is hostage to the fact that its fuel quality is 3 generations behind that of the European market. Econometrics Director and Senior Economist Tony Twine tells Engineering News.
Here in South Africa, the petrol and diesel produced by our local refineries and synthetic fuel plants is effectively a Euro 2 status, which is 3 generations of fuel behind that now available on the European mainland. As a result, our local vehicle suppliers are unable to sell the most high-tech engineering equipment into the South African marketplace, which means that the fuel is dictating the level of engineering, which is dictating the level of carbon dioxide emission and actually raising emissions in the country to levels that could be avoided.
That's Creamer Media's Real Economy Report. Join us again next week for more news and insight into South Africa's real economy.
Led by Martin Creamer, Mining Weekly's bureaus in Perth, Johannesburg and Toronto deliver unrivaled global coverage of the resources industry and the companies shaping it. Creamer Media's Mining Weekly for mining news around the clock.